welcome everybody. We're excited to have you on today for episode 21 of Canadian Mortgage Weekly. We are joined, as always, by Joe Bladek, who is a mortgage professional in the Barrie, Ontario, Simcoe area, basically all of Ontario. But Joe lives in Aurelia with his family. He's married with two kids. One just had a birthday, and Joe's birthday is coming up too. So, it's good to be with you today, Joe. How are you today?
Pretty good, Sam. Thanks for the introduction. And yes, it is my birthday this month. I'm turning the big 4-0, so that'll be fun to experience during stay-at-home order this year. And it's good to be back. Episode 21. And Sam, great to have you on the show as well. Sam Thompson is a mortgage agent today with Mega Mortgage. He's been with us for over a year. And looking forward to have you on episode 21. I know that you originally came from Ottawa, moved to Barrie last year, and married last year as well. So welcome to the show today, Sam.
Thank you. Yeah, it's been a big 2020 for me. Lots of changes, and I mean, COVID. It's been a big change for everybody, but I'm happy to be on here today. And I guess we can start off just by covering off some things we've been seeing in the news on sort of the mortgage and housing side, just to update everyone so that they don't have to go through all the boring news articles. We can kind of touch on some of the exciting stuff that we've been seeing. And one of the things that I found was actually that CMHC had made a statement, a report, just giving that we saw a bit of a slow in house sales, as well as a slight decrease in house prices in April. Now, I mean, again, year to year and comparatively, they're still very high, and it's still very active. But they're actually predicting that this is sort of the start of the sort of slowing process, that we're going to be rolling into a bit of a soft landing. So it's encouraging to hear if that is the case. It's really hard. I feel like we're almost like weathermen. It's like we think it's going to go one way, but we don't know. By the time it actually comes to fruition, we'll see.
Yeah, it's hard to know what will happen with all the housing prices right now, the way it's all going, but that's okay because it seems to be it's always the market dictating what's happening with the price. And I don't know about you, Sam, but we've seen it stay either on a seller's market or a balanced market, kind of jumping back and forth between those two this year.
For sure.
Yeah.
For sure.
That is a very interesting thing. But the good thing is that the banks, though, are saying that even though we're going to have a soft landing by CMHC, they're saying that in the third quarter, we should have a very robust and growing third quarter of the year. Right. Once everything opens back up and the economy is open and everyone's getting their vaccines. So I'm thinking that we may have a soft landing, but it could continue to keep going in the third quarter. What about you, Sam? What do you think about that?
Yeah, I think that's definitely likely, and I think we've seen a few articles where they interviewed economists, and they were saying, similarly, and mentioning on that it's almost like a slingshot, right, where we're seeing lulls, that's kind of it being pulled back, and then it just shoots off to this, we're expecting a busy third quarter. So we'll see what fall brings. Like you're saying, there's rollouts of vaccines. Everyone who gets it in the summer should have their second dose by then, and
everything will open up, and people will start looking at homes. More people will list homes, be more comfortable to move. But yes, in addition to that, though, there's some other news too coming out, right, Sam? We've seen lumber prices. I know that's a big dictator as to how construction is going and the house prices and the cost of building a home. But the last 8 days, we've seen lumber prices continue their trend downwards.
Yeah, that's definitely a big news, especially for builders, right? When you factor out the price of one 2x4 or one sheet of plywood times an entire house, it's quite a big reflection when we see those prices dropping.
Yeah, I think it's going to be a really good thing for home buyers because new home prices should not go up in price too much.
Mhm.
Uh, we might not see the lumber prices go back down to what they were at before, but it's probably a lot more palatable just for builders and people that are building with their own homes right now, doing renovations, to see lower prices going forward.
Absolutely. Mhm.
Yeah, yeah. But yeah, that's kind of what's going on with the mortgage news. I really appreciate the soft landing piece there. That's something that a lot of home buyers are probably thinking about right now. Should I buy? Should I not buy? But the thing is, you got to keep in mind when you are buying, when it's soft landing, or selling the soft landing. So it's a double-edged sword. Whereas if you're selling when it's really good, you're also buying when it's really high. So as long as
Right.
you stay in the market, you tend to work pretty well.
Mhm.
Well, we should get started on our presentation. We have a special guest joining us very shortly. And I know that what I wanted to do is just go in with you, Sam, and talk about some challenges that people that are retired or have cut
Mhm.
back on their hours when they're older, some challenges that they have when they're trying to get a new mortgage or buy and sell. So why don't we dive into that, shall we, Sam?
That sounds awesome, Joe.
Okay, sounds great. So I'm just going to share my screen here and make sure that you guys can see that. You guys can see that, everything good?
Yeah, looks great.
All right, so just moving on, uh, what we'll do is we'll just dive right into some challenges people have, some typical scenarios that people have with getting a mortgage when they're a little bit older, retired, or just having a part-time income. So, for example, if we have a lot of times, Sam and I are speaking with clients that are older, in this case, 65 and 69. Kids are going to university. They also want some cash to fix up their home and make it more accessible. So this couple, they make $38,000 together on a fixed income. Now, the challenge is that the bank would decline them for what they need because, Sam, the debt ratios are too high. The
Mhm.
bank wants to see an income,
Yeah.
even though there's a lot of equity.
Mhm.
For example, Sam actually put these numbers together for us. So thank you very much, Sam. Bill and Judy making 38,000 across CPP and old age security. They do have a small mortgage, small car loan, and a line of credit totaling around 48,000. So if they were to take out any extra money, we found that the bank would want them to actually pay everything off first before they could get any extra funds. But at that point, they don't qualify for anything extra. That
Mhm.
mortgage itself tops out
Yeah.
everything they need. So Sam, I don't know if we could get anything more for them with a traditional bank or lender, right?
Yeah, yeah, and even in running the numbers, it wasn't looking, like a very desirable or even really a positive situation. It's possible, but again, it feels like there's a bit of limitations on it.
Mhm. Well, let's move into a second case study that we typically have trouble with as well. And that is, folks that are a little bit older, maybe they don't need the funds to pay for kids' education, or maybe they don't need the funds for renovations, but maybe they want to move right size to a
Mhm.
bungalow from a two-story home. Um, and maybe they also want the option to make payments. Maybe they're at a stage in life where they don't want to make all the mortgage payments. They want to hold some back.
Mhm.
Again, banks would decline that kind of a file because, as you know, Sam, banks want all their mortgage payments.
That's right.
Yeah, yeah. And it's also hard because, it's hard when you are not working full time and banks don't have that income to rely on.
Hmm.
So in this case, they make a small amount of money, a $32,000 family income. And even though they currently have no debt and have paid off their mortgage, uh, and their home is worth 600,000, the most they could get through a traditional lender would be 95,000.
Right.
So there are better options available, and they are designed to help those with lots of equity. There are options available that can help home buyers and homeowners that are over the age of 55 get a mortgage set up, ones that have a good or average credit score. And also anyone that has a low or fixed income would be able to get onto something like this as well. All right. So if anyone has a low income or a fixed income, they would be able to hop on and get a mortgage through a lender that specifically specializes in lending on those who have a higher age or low income. So it's a great time to introduce our special guest. I just want to make sure he is on the call.
Yeah, he is joined now.
All right. Hey, Barry, are you there?
Yeah, can you hear me?
Oh yeah, Barry, there you are. I can't see you, but I can hear you. Let me just make sure. I'll just stop sharing my presentation here. How are you, Barry? Good to hear from you.
Not bad. How are you? Good to
Not
be
too
here.
bad. Yeah, great. So Barry Ray's from HomEquity Bank. Barry's got he's actually got 7 grandkids, believe it or not. And he's they're all girls, aren't they, Barry?
Yes, they all got, yes, and they're all under 7, so they keep me busy when they visit. It was it's nice when they come, and I look forward sometimes when they are leaving.
That's right.
That's great. I'm just trying to stop my share here so I can get out of here. Just one sec here. I think I got to go into my other screen. There we are. It's perfect. So there we are. Thanks for joining us today, Barry. I appreciate it so much. So Barry, before we begin, I mean, we've been chatting for a while, and I know there are a lot of challenges there that people have with getting a mortgage when they're a little bit older. So maybe you can help us all out and tell us a little bit about how is a reverse mortgage different than a traditional mortgage, so we can just introduce the concept to everybody here today.
Yeah, so just to let you know, HomEquity Bank is a Schedule I bank. So, and what the government allows us to do under our charter is to lend to clients over 55. So that's kind of the minimum age yet is kind of your your way to entry is over 55. And for a lot of our clients, it is certainly a way to access equity out of their home. But the major differences is that number one is our credit and income guidelines are not as stringent. So that's number one. So credit, income, if you talk to most of the major banks, there's certain income requirements they have to meet. So for us, it's not a major factor in our decision. And number two is you qualify really based on the value of the home and your age.
Mm-hmm.
And why that is important and why people have to know that is because you do have the option to pay interest or not. So that so a lot of our clients, 80% of the clients that I would deal with Joe and Sam would not pay interest. They would just defer it until they move or sell. Mm-hmm. It's really it really is a cash flow instrument, right? Mm-hmm. But it is a standard charge mortgage. It's no different than a regular mortgage. It's calculated semi-annually, not in advance. So people have to understand that part of it, but you have more options to pay interest or not. So which is, for a lot of our clients, is really important, right?
Yeah, that's great, because we have talked before about this, and sometimes clients need funds for carrying costs, condo fees, whatever it may be, those monthly costs, because they're on a fixed income. So having that extra flexibility really helps them out when their income isn't really that flexible anymore in that stage of life.
Yeah, absolutely. A lot of our, our average age of client, Joe, just in Sam, for example, is in their early 70s. That's their average age, And I do have my oldest client, as I said to Joe when we were talking one day, was my oldest client's 101.
That's amazing.
Yeah, so that, it's great. But for most of the people, it's even more than ever, clients want to stay in their home. They want us to have no stress or low stress about finances.
Yes.
Right. And it's really important for them to make the financial decisions they want. And this product really empowers them to stay in their home. And they be, quite honestly, as I say to clients, I'm in a demographic is they've earned the right to make those decisions, right? And that's really important.
Fantastic. That's a good thing, Barry. And just the fact that they can stay in their home and not have to worry about downsizing or selling and then using those funds to rent. That's really good. And then they can keep that equity and keep their home appreciating over the number of years that they continue to hold it. What I wanted to ask you is, you know, do you find that a lot of clients in that age are worried about maintaining their home and the cost about all that? Do you find that they come to you, for a lot of those requests to?
Very common concern. I think one thing we're seeing and we'll likely continue to see is just the increased cost of living. So you got to realize 60% of Canadians don't have an extra pension plan. They have OAS, they have CPP, and they may have a few government subsidies, but they're on a fixed income, you know, might go up 2% a year. But, you know, we're seeing taxes and hydro and groceries and everything going up. And I don't know if you're, you know, I'm sure older clients are just like my parents, is they like stability and they like to be in control, and they don't want to worry about their finances. And quite honestly, as we've seen over the years, real estate is your best investment and your best asset. So the great news is you can take funds out of, you know, from your house under your discretion. And it's, you know, and the best part is tax-free money. So people always ask me, do I have to show it on my income tax return? And I say, no, absolutely not. Do not show it. You've earned this money through your house. And of course, funds from the sale of a house or from your house is not taxable, right?
That's right. And the good thing is that when they take the funds out from HomEquity Bank, they only pay the interest on what they're using, not what they're approved for. So theoretically, it almost acts like a line of credit.
Absolutely right, Joe. Absolutely right, Joe and Sam. So the thing is, you know, if your house is worth $700,000 or $800,000 and you're approved for $300,000, which is pretty, you know, pretty common, then you can decide how much you want to take out, when you want to take it out, and you're only being charged the interest on the funds taken. The good news is, and likely the most important part for my clients, is that approval is a lifetime approval.
A lifetime approval.
As long as you're in the house, and you know your obligations is to keep your taxes up to date and keep your insurance on your house as you normally would do, right? So that's really important. Just knowing that within 24 hours they can get money, and you know if they have to buy a new car or the roof has a leak or something, you know they want to give money to kids, whatever. Call Barry and you know what, he'll put you in, you know, in touch with them. Our client services, and they'll arrange to deposit money in your account, right? Which is great.
Awesome. Thanks. I appreciate that advice there. So you mentioned kids and helping kids out. So I know that that's something is something we're seeing a lot of these days, you know, parents helping their kids out, and parents that I'm finding are helping their first time buyers that are buying their houses for the first time are in that age bracket, you know, 60 to 70, possibly even higher, up to 80 years of age at this point, helping their kids out. So what else is trending right now like that on your side? What are you seeing, you know, because of COVID? And are you seeing that as well? Parents helping their kids out with first time buyers and stuff like that?
I'm seeing three things on the early inheritance, and this is really taking up steam right now. So number one is helping the kids buy that first house, right? By getting them in the house that they would like, in the location that they would like. So instead of cashing out investments, right, Joe? I mean, we see that all the time, Sam.
All the time.
Or instead of them accessing their own credit, which will tie up their credit for a period of time, they can pass money from their house to their kids tax-free to help with that down payment. That is becoming very common, right? Number two, I'm seeing on the early inheritance part where, you know, somebody's off work, one of the children's off work, you know, people are having a little tougher time right now. So it's a great way to pass on some money, $30,000, $40,000, $50,000 to help them out, get them to see it. And you know, I've had a couple inquiries just this week on, quite honestly, grandparents passing on some of their wealth to their children, you know, while they can, so they can see them enjoy it, which is really important, right? You know what? And quite honestly, from a tax perspective, it will help on the probate tax, right?
Yeah, it does help.
Yeah, help out on that part, right? So yeah, I see a lot of that, Joe, going on right now in Sam.
Oh, that's excellent. Yeah, so that would really help on the taxes. It helps the grandparent or parent give their kids or grandchildren something that they can actually help them with financially right now while they're still around, instead of waiting until the will, so they can actually be part of that joy. So that's great. So we've covered off a few different things. We've covered off how Home Equity Bank can help those who have a home access their equity for unforeseen expenses, possibly carrying costs, things that are like increase in the cost of consumer goods like groceries, all that stuff, just to help them live like that. Also help their kids. And I understand also that we can use Home Equity Bank for those looking to purchase a new home as well, just so we can make sure that we can cross that one there. And if anyone's looking to purchase a new home, we can also use that same qualifying metric for that, where
Absolutely.
someone would qualify, say, for 100,000 or 200,000 mortgage through a traditional lender. Usually it's a lot more through Home Equity Bank because they are retired and they are of that age, 70 to 80 years old.
Yeah, absolutely. And that's another growing trend. I'm seeing a lot this spring, Sam and Joe, is that people, a lot of our clients are buying their last home, right? And of course, values have gone up a lot. They want to pay off some debt maybe, but when it comes to closing, they found their house and they just don't have enough to close or to buy that house. And people say, can I use a chip on a purchase? And you absolutely can. It's no different than any other product, mortgage product. We will advance funds on the day of closing. You will qualify based on your age and value of property that you're buying. So it is becoming very common. And also, I know I just had a recent example where a client was buying a condo and wanted to buy the condo, but was worried a little bit about, the condo fees and taxes, the cost of it. So we were able to set up, a monthly advance to cover those costs. So purchases, you talked about, Joe, you asked that question, what's trending? Purchases is really trending now for CHIP, right? Because people are not looking maybe as much into retirement living, but they're looking to move into that last home that, that they'll hopefully spend, their last years in, right? So yeah, consider CHIP for a purchase, absolutely.
Oh, fantastic. Well, thanks very much, Barry. I appreciate it. And I thank you and Home Equity Bank for coming on today to share all this information with us, because it helps our clients just get to know the product a little bit better. So if anyone has any information that they or any questions that they would like, feel free to reach out to Sam or myself. We'll make sure that we'll get Barry working on your mortgage right away at Home Equity Bank, and we can get those tied up for you and get your approval all set up. So yeah, thanks for coming on. I know you must be pretty busy with your 7 grandkids there. So
yeah, absolutely, enjoy it. Thanks very much for having me on, and I really appreciate the opportunity just to pass on some education on this product, just so you know what it looks like. Okay, thanks guys. Appreciate
thanks,
it.
Barry. We'll see you next time.
All the best. Take care.
Yeah. All right. Thanks so much, Barry from Home Equity Bank, coming on and chatting about mortgages. Sam, that was really valuable information. Anyone that's looking for a mortgage right now that is retired or in that stage in life, really a good option for them with Home Equity Bank. What do you think, Sam?
Absolutely. I think it was a lot of good information, and it was good chatting about sort of what's actually trending in that sort of demographic and what Barry's been seeing, as that's where he's working, and that's the sort of that stage of life that he's working with. It's interesting to get that perspective for his side and what he's seeing trending, because as we talked about, there's a lot of first-time buyers that are needing a co-signer, and it's not limited to just just younger parents, but it's quite a varied range. So it was really, really good information.
Yeah, and it's really good just to see that not only if the clients want to buy a property, but they can also access money out of their existing property going on a monthly basis or one time, or they could access their equity to help their kids buy a house and give them the down payment, early inheritance, save on probate tax. So there's so many cool things that mortgages can help out with family planning and all that stuff. So it was really good to have Barry on. If any of you have any questions, with any of that, please drop us a comment or send us a private message after, and Sam and I or Terry Lynn at the office will make sure we start your mortgage and give you your options available to you. But yeah, this has been a really cool series, our two-part series, Sam, about retired mortgage options. I know that it's hard to cover all the different aspects of everything on all our series, but we have an exciting series that we are starting next week. Sam, do you want to tell us about that?
Yeah, absolutely. We're unsure about you guys watching, but we're definitely noticing that the weather's getting nicer. It's getting hotter. It's brighter longer, and it's starting to feel like summer. We want to start off a series that we're titling loosely "Spring into Summer." So we're going to be covering off a lot of the new renovations or possibly new purchases in and around your home that typically you'll make in the summer. So yeah, we're really looking forward to going through that new series, sort of, focus on what a lot of people are looking for in the summer for, home renovations, putting that pool in, updating the deck, all of those scenarios. We'll break those down for you.
That's right. Yeah, I know there's a lot of people that always ask, like, what do we need to do to do like you're saying, add a pool or install a deck or even finish a basement. What is required on the mortgage side? What's required on the other sides? Like, how do we even get started? So at least Sam and I will be able to provide you all with some good guidance as to where you need to start, and that is to get pre-approved for all that stuff. And we'll be able to walk you through all that starting next week here on Canadian Mortgage Weekly, episode 22 at 11:30 on Thursday. So one more opportunity just to ask any questions. Sam, do we have any questions live today? Probably a lot of people ask their questions privately, but just want to make sure.
Nothing at the moment, but yeah, I'm sure we'll get some in over the next few days.
All right. Well, thanks very much, everyone, for joining Sam and I today for episode 21 with Barry Ray from HomEquity Bank. Again, if there's any other questions with reverse mortgages can offer anyone that is retired the ability to purchase or to refinance or to access equity from their home without the need for higher private mortgage rates. So yeah, looking forward to helping all you guys out, and I hope you have a great day.